Introducing AusBiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover AusBiz Capital GrowWise, investing informed by experience.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Well, the US Federal Reserve has cut interest rates by an expected 25 basis points, with Fed Chair Jerome Powell citing the need to support the economy in light of a weak jobs market.
While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point.
Well, the central bank indicated it will steadily cut rates for the rest of the year, with the Fed projecting 2 more quarter percentage point cuts this year.
I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
New Governor Stephen Myron, who joined the Fed on Tuesday, was the one dissenter in favour of a half percentage point rate cut.
Participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027.
So while Jerome Powell pointed to rising downside risks of unemployment compared to inflation, he said inflation risks still need to be assessed and managed.
We have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point. And we do expect them to continue to build over the course of the rest of the year and into next year.
After the cut, Treasury yields initially raised gains and turned lower before reversing course as Jerome Powell spoke. The US 10-year note rising to 4.07%, the 2-year finishing higher at 3.51%. And the US dollar strengthened against most major peers, the Aussie falling to 66.6 US cents. And the Bank of Canada cut its policy interest rate for the first time since March to 2.5%, as it contends with weak economic growth and a tough outlook for job seekers, with expectations of more easing ahead. Well, global stocks pushed new records in choppy trade after the Fed's widely expected rate cut. The Nasdaq and the S&P closed lower, the Dow closing higher after meandering during Jerome Powell's speech. Nvidia weighed on the Nasdaq, shares falling after reports said China's internet regulator had instructed the country's biggest tech companies to stop buying all of the AI leaders' chips. Workday shares jumped on a report that activist investor Elliott Management has taken a more than $2 billion stake in the human resources software provider. Lyft shares surged on news that Alphabet's Waymo would launch autonomous taxi rides in Nashville next year, with the ride-hailing firm shares of rival Uber falling 5%. And General Mills maintained its annual sales and profit forecast as the breakfast cereal maker grapples with rising economic uncertainty and softer demand in key markets, including North America. Well, oil prices have eased after data showed an increase in US diesel stockpiles, stoking concerns about demand, despite the Fed cutting rates. Brent crude futures lower at $68 a barrel. Copper fell almost 2%, iron ore marginally lower at $106 a tonne, and gold hit a fresh record high after the Fed's decision, reaching a new peak of $3,707 an ounce. However, it subsequently unwound those gains. and Bitcoin is trading at around 116,000 US dollars. Well, let's get across what we heard from the Fed and the market reaction. Ira Epstein joining us from Linton Associates. Ira, welcome back. So let's get to what we heard from Jerome Powell. We knew that a cut was coming, 25 basis points. What did you make of what he had to say?
I think he called me and he asked me what I was thinking. And it's just what, Andrew, we talked about. And by the way, thanks for having me. Here's what you and I thought when we were talking to each other, at least what we said last week. I expected a 25 basis point cut. I expected him to say that inflation is still a big concern, but the labor market is coming down and that they've decided to focus on the labor market more than they are on inflation, and that they would go the quarter point now, and then each meeting will be live, and as long as the data doesn't get out of control, they will move the data and go accordingly. So what the members are saying is they expect that inflation data to slip back gradually. And when I say gradually, if they're looking to get into 2027 to get to a 3.1% neutral rate, I mean, that's quite a ways off. And it's not a 2% number. So what the Fed doesn't say, and they'll say that in these words, they'll tell you they still have a long-term goal. They're not going to hit it. And I've been on the show with you a long time. And I said that's fantasy land, and I'm going to stick with that. Inflation changed the game via tariffs. That is what the problem is. The problem isn't the cost of goods. The problem is the 15 to 25 to 50% tariffs that President Trump has put on many countries, and that is your cause of goods inflation. As for the labor problem, it is a mixture of, number one, who's eating that price. And if you listen to the speech, the Fed chair said it is the importer that's eating it, and he can only do that so long, and then it gets passed on to the public, and that's why he's saying the inflation is gradually climbing. So it's no different than we thought. I think you have to walk away from that being somewhat bearish in the US dollar longer term. I think you have to look still at the gold market from an inflationary point of view, but understand the yin-yang impact. The Fed comes out 1 o'clock. You're 13 hours ahead of us there. So think of what you're all sleeping when the Fed is talking. Now you're up and America's getting ready to go to bed, and then Europe is sleeping very shortly. So we'll get the impact out of Asia. We'll get the impact out of Europe. And by the time it comes back 4 or 5 in the morning into the United States, that is when we'll start reacting next to it. So expect another. You could reverse everything from today. It's hard to tell. I will stay with my thoughts. Long gold, I can see a bit of a sideways action, silver and copper slipping, bearish the dollar, bullish more currencies, bullish the stock market going into the end of the year. I realize this 2-week period we're in historically is in America one of the weakest times for our stock market. We'll see if it pays attention. It paid no attention to the August weakness. It may not pay attention to this time around either.
Ira, does the economy need juicing? At least another couple of cuts to come, given that you've already got that massive spending on AI, you've got the Trump administration's tax cuts, deregulation. I mean, there's a lot of stimulus there already.
The stimulus is there. The problem is the labor. And you've got to remember, this is it. Fed Chair Powell said he did not believe that AI was the cause of the labor market. He blames it in part, which didn't make sense to me, on the lack of immigrants coming in. But we don't have enough job offers out there is what the problem is. If I'm a company and I'm eating the import tariff, I have to get through this to understand what my real cost is going to be and what's my demand going to be going forward, because I'm now suddenly looking at my profit getting shrunk by whatever that 15% means in terms of the raw good or whatever I'm importing. If it's a finished good, that's a whole different story. It's even worse for me. But if it's just 15% for a raw good of some type that I put into a product and finish it, that's not as much impact. So a lot to be taken into account, but I would certainly, as a businessman, go, I think I'm going to hold back right now. I'd like to keep the people I have as best as I can, but I don't think it's the time to expand at this point.
All right, so Ira, you pointed to perhaps that market reaction over the next 24 hours. more broadly, medium term, what are you expecting as far as the equity market is concerned? What are investors now going to be looking for?
They're going to be looking at how earnings go, and this will be an earnings-driven market. So what they're doing is they're not going to look at the big tech, as you just mentioned. They're going to look in what we both talked about a month ago, maybe 2 months ago. I said, I'm shifting gears, and the market I suddenly like a lot are the Russell 2000 stocks. The companies that are reliant on falling interest rates, because most of them in those index don't make money. They rely on heavy capital needs. They're young companies. They're trying to cross that point where they get profitable, and they're borrowing like there's no tomorrow. So as these rates come down, it's like you're looking around and you go, gee, do I really want to buy something 40 times earnings? I can pick up one of these companies and whatever the part of the division you want of the economy, and that's where they're shopping. So that's why you're seeing names all of a sudden go up that you don't even remember hearing. I don't. I mean, there's so many stocks. How can you remember every name? And that is what I'm watching in the market. So that's where I think they're at. I think there's rotation. That's the right word. I don't think you jump into AI as heavy as you did. I think that you understand the Fed's going to let inflation run, and on breaks, you're buying gold.
Ira, always terrific to get your analysis. Thanks for joining us from Linton Associates.
Thanks for having me.
Let's now turn our attention to the local market ahead of the open here on this Thursday. We are expecting a negative start, off just over 0.1%. The focus obviously been on reaction to what we saw from the Fed overnight, but also some significant corporate news too, with the takeover deal for Santos now dead in the water, with that takeover deal having been withdrawn. So we'll get right across all of that news in just a moment. Stay with us.